everyone, I hope you all are doing really good. Welcome to our channel, and in this video we are going to explain you about the two concepts of fixed income securities, which are credit risk and credit spread. Now we will explain you these two concepts with the help of a case of a Shriram Finance. Imagine you are a shopkeeper and you want to borrow some money. Now a very rich and a trusted person is standing next to you and he's saying that I trust you and I'm ready to invest in your business. Now what will happen? Everyone will be ready to invest in your shop at a very lower interest rate. Something very similar happened in December 2025 when a global Japanese bank called MUFG bought around 20% stake in Shriram Finance. Now, this was not just a share purchase, but this deal changed how investors and credit agencies now look at Shriram Finance. So, first, let us understand about the Shriram Finance in very simple terms. So, Shriram Finance is a non banking financial company whose main business is to give loans to people and small businesses. But to give loan, it needs money, and Shriram Finance does not print money. It basically takes loan from other banking institutions, or it borrows money. It raises money by issuing bonds in the market so that it can give that money, or it can lend that money to other small businesses. Now here is the most important part. When a company borrows money, the lender is concerned about a very important question, that can I trust you to repay my money on time?
Now I'll be continuing. So before MUFG entered, Shriram Finance was seen as a company that operates in relatively risk lending segments. Because of this, investors felt that lending to Shriram Finance involved higher risk. And in finance, higher risk means one of the major thing is that higher interest rate. So Shriram Finance had to pay more interest when it issued bonds, and this increased in cost of borrowing and reduced profitability. In simple words, Shriram Finance was a capable borrower, but the market was still cautious. In December 2025, MUFG, one of the largest and most conservative banks in Japan, decided to buy around 20% stake in Shriram Finance. MUFG is also known as globally for strong governance, deep capital strength, and very low default tolerance. So when MUFG invested in Shriram Finance, the market did not see it just an equity deal. The market saw it as a strong vote of confidence.
Now we will continue with our first fixed income concept, which is credit risk. Credit risk means the type of risk in which there's a chance borrower may not repay the loan on time. To measure this risk, credit rating agencies study companies and give rating to their bonds. If the credit rating is higher, then there is a lower risk. Company can borrow the money at a lower interest rate. MUFG invested in Shriram Finance. It showed that global bank trust their financial strength in company's business. It also leads to Shriram Finance stability to repay the loan on time. It showed that Shriram Finance is less risky. So that's the concept of credit risk. Now we will understand about the second concept, which is credit spread. Credit spread means the company has to pay more interest as compared to a very safe borrower, which is government. If investor feels risky, then they ask for a higher credit spread. And if investor feel confident, then they are willing to accept lower credit spread. In the case of when MUFG invested in Shriram Finance, they are very happy with that investment. It shows that Shriram Finance are strong enough to repay their loans on time. And it also showed that Shriram Finance now can issue their bonds at a lower interest rates, and which ultimately leads to lower cost funding. So that's how the concept of credit spread works.
Impact analysis. The positive impact of this deal is very clear. Shriram Finance benefit from lower borrowing cost, better market confidence, and stronger access to capital. Bond investor benefit because the credit quality improves, reducing default risk. However, there is a small trade-off. The company gives up partial ownership and faces higher expectations of performance and as well as governance. Even then, the overall impact is clearly positive from a fixed income perspective. There are some recommendations. From the issuer point of view, Shriram Finance should use this opportunity to strengthen its balance sheet using cheaper fund. From an investor point of view, Shriram Finance bond become more attractive due to reduced credit risk. From a regulatory point of view, such as long-term strategic investment should be encouraged. In conclusion, MUFG's 20% stake is not just an equity investment. It is a powerful signal that improves credit perception, reducing funding cost, and strengthens Shriram Finance positions in India's bond market. Thank you.